Good morning, everyone. Everybody see my screen okay this morning? Should have the morning market breakdown on the screen there. Excellent, excellent. All right, glad you're all here. Let's just kind of mosey through this. Of course, we'll talk about risk. Always remember that anything to do with trading or investing, you put funds at risk. So only trade with risk capital, money you can afford to lose. Even though Nadex provides some fantastic tools, you still have of course, we'll just say an opportunity to lose your money. So just be very careful that you're using good old common horse sense with risk funds. All right, that's me. I've been doing this for a day or two. Anyway, we'll move on from that. All right, so let's take a look here at the upcoming news for the week. I like to look at, primarily I just focus on Forex Factory. In fact, let's come over here, Forex Factory. But another great site is my FX book. It really just, I think, comes down to personal taste, whatever you prefer. But always check out the news events for the week, for the day, even for that, for known news events. My kind of pet peeve is some folks don't have a clue when these news events are taking place, and they can be big market movers, which can be a double-edged sword. And you know, the way Murphy's Law works is primarily you're going to be on the wrong side of that movement if you're trading off these smaller time frames intraday. So be aware of that, and maybe just think about standing clear until after the news passes by. And my wait time is usually going to be about an hour or so after a news event, or even prior to a news event. I won't look to take a new trade prior to a news event like that. So just to kind of give you an idea here, let's do this. And there you go. So that is the Forex Factory. Now what I've done here, as I typically show you, is I like to filter the events down. I come up here to this filter here. This is a free service, by the way. You don't have to sign up for anything, but right up here, and just click this filter, and then I uncheck these boxes here. And I just want to focus on the high impact events, which are the red folders. And here you go. So today there's no news, no high impact events. Tomorrow we have a news event at 5:30 my time, so 8:30 Eastern out of Canada, and then later out of the US we have the FOMC meeting minutes, so that'll be a mover. Thursday we have 3 events here right around midnight, as you can see here, out of Europe and then New Zealand, and then Friday out of Canada and the US, and then the Jackson Hole Symposium on Friday as well. All right, so there we go. In regards to that, let's get back here for a moment. What we want to do next is we're going to take a look at some charts. So let me bring over my charts, and we'll load that up, and we'll get to it. You got your coffee this morning, or tea, or whatever you happen to sit down in the morning. All right, so one of the things, I've been doing this for a long time, and usually at this time of the year, going into the Labor Day weekend, the market action tends to slow down. Now, keep in mind that there's always the chance for big news release, unknown news release, for instance, a tweet by the president, which can send the market or market spiraling. But many times you're just going to see price activity like we see right here, for example. A lot of sideways type of action. Not super volatile, so just be aware of that. And the volatility that comes many times, it's short-lived as far as movement out of the market, so you get some false moves. I'm not a big trader at this time of the year, personally, just because of that. That said, we're going to take a look here at the S&P. All right. Remember, by the way, let me add to that sideways action. So there are three positions you can have in a market. You can be long, you can be short, or you can be in cash. There's nothing wrong with being in cash watching the market. All right, so let's come over here. So this is my workspace. I have multiple time frames on here. The time frames are primarily divisible or multiples of 3. So I look at a 3-minute, a 9-minute, 27-minute, 81-minute, 243-minute, 729-minute charts. There's also a 1 minute on here and a daily. I do top-down analysis. So I'm going to start here at the 729 chart. And we're just going to look at this. So I have some zones marked off here. These are resistance in the red, support in the green, and I have some different trend lines that are on here. And just kind of looking for the market to move from zone to zone. Markets, in my opinion, move from support to resistance, resistance to support, act as magnets, if you will. I also have a couple of indicators on the chart. Right here is my momentum indicator, and this is my, we just had this, we pushed this here a couple weeks ago. This is my turning point indicator, but I use this for help timing entries, that sort of thing, and the momentum just to help me get a good visual of what the momentum is. Currently, the momentum is up, but it's waning a little bit. If you look at it closely here, you can see how that blue, whoops, I didn't do a very good job with that. Let me try that again. The blue is lighter, a lighter blue here, and that is, in fact, if you compare it to something like that, the lighter blue just tells me that the momentum is starting to stall out a bit. Not that it's necessarily going to stop in that direction, but that it's starting to stall. And you can see here on this time frame, we're up, the market was up against resistance earlier at the bottom of that red zone and is pulling back a bit. So we're seeing a turn here, potential cycle high. If you will, oh, this charting platform, Jason, is Bar Chart Trader. So I have my own indicators on Bar Chart Trader. It's barcharttrader.com, should get you info there if you're interested. So see, we're up, the market's up against resistance. We also have this 200 period moving average here on this higher time frame right below us. So the market's kind of ping-ponging here these last couple of bars in between those zones. So we have some momentum that's waning. We have a cycle high that's possibly going in here. Let's take a look at the next smaller time frame, which is a 243 minute chart. You get a little more clarity here. Also, if we look here, you can see we had a, let's see here. So we had the market push up to the resistance here. The market is now kind of vacillating here between that level and this level here. There's also a couple moving averages here acting as support, which is how I use moving averages for support and resistance levels. The market made a nice run. So really, if you look at that little drawing I just made, that is a bull flag. A bull flag, we're getting a pullback here. So I would look, I'm going to start looking for a test of this region down here. The market's currently at 29.21.5. So, you know, you can see here that, in fact, let me move that so you can actually see it. This yellow moving average is a 13 exponential moving average. That comes in at 29.10 and change. So we're looking at about 11-point move all the way down there. I don't know if it's going to get that far. I would say that this level here, 29.14, is very possible, right in that ballpark at this point. Just kind of looking for the market. In fact, let's do this to kind of fill in this little area right here. And we're going to sync that over to our other charts. There we go. All right, so we have kind of a bull flag. We have the market pulling back a little bit here. Now, one thing I will point out to you as far as momentum goes, look at this. We had a high to a higher high, just wick to wick. Here we had high to lower high on momentum. But then we had high to, it looks like this is the high here, high to lower high there, but high to higher high here. So we had an increase in the momentum in the market, but running into this resistance, it didn't go anywhere. All right, so let's go down to the 81-minute chart. There we go, right here. So you can see here on these upper time frames, the smaller time frames, that the market is moving down. We'll get to those in just a moment here. All right, so here's a little bit more clarity within the overall analysis here. Let's just kind of mark some of this off. So here's this region here that I essentially called a flag, right? We'll mark that off, and that's the flag pole. But you can see how the market's starting to push down here. We just talked about that. And momentum within this time frame is negative now. It's bearish momentum, and it has confirmed that cycle high. We're well below the midpoint. And so we're, again, looking for that ellipse that I drew on the other time frame to kind of fill in, or at least halfway. So that looks like it's going to be right here at my horizontal dashed line, right in that ballpark. And again, that's at 29.14 and change. All right, so let's go down here. We'll go down to the 27-minute chart. And let's see if we see any other. Okay, so there is one level here. The reason I look at these multiple time frames is because you see things on the smaller time frames or even the larger time frames that you may not see on another time frame. That's the whole idea. All right, so I just kind of marked off, or I just did mark off this level here. And you see the market's just clipped that. Now this red moving average is the 89 period simple moving average. It is acting as support here at the moment. Again, you can see where everything else is relative to price action. We are seeing a series of lower highs across here, and momentum is following suit. And even our cycle study has followed suit. So now we've crossed over, put in a cycle high. That's confirmed. So heading towards the bottom of that flag, if you will, that channel that I just drew out. Everybody with me? Y'all awake this morning? All right, good deal. All right, so here, look at this. So see how much more clarity you get by looking at this time frame? You can see what I drew out on those higher time frames, the 729, the 243-minute time frames. And you can see how the market's just kind of pushing into this now. So within this, I'm also going to draw one more level here, right here. So kind of touching these real bodies of these candles, the wick here, wicks and real bodies here. So that's another level. You can see where that falls into place inside that ellipse that I drew. The market's just an eyelash or two away from that. It looks like about 2 handles from it at the moment. Still pushing lower. So as it comes down into this region, if it continues to come down into this region, it's where I'll look for it to possibly bottom out. Now, the market opens up here in about 17 minutes. So we'll get some oomph or push out of the market from there too. We may even see the market push down into the bottom here, but we'll have to wait and see. But at the moment, you can see how it's coming right down to that line I just dropped down there, which is of course inside that ellipse that we drew a few minutes ago. So really, here's the thing with the way I look at the markets is I look for the story the market's trying to tell me. And then I can make projections off of that, just based off of what the market has told me. Does that make sense? So then, of course, I have some tools that I use that in conjunction with that. So look at that right now, just hitting that line. So basically, this is a 9-minute chart, and we've been doing this for about 13, 14 minutes here this morning. We can come back into this candle here, and the market. Look where the market was at that point. So it's dropped about 4 handles here. And so it came, look at that, it came right down. Make sure you can see this. Here's the wick right here. That's the bottom of the wick right there. Came right down to my trend line, didn't it? So it came down to the trend line and reacted. Another little note here, you may want to write this down, because this is something that freaks people out, especially when you're on these smaller time frames, is that when a market tests the first time a new test of a support or resistance level, the market tends to react to that. So if you happen to be in a position, I guess is what I'm getting at, not to freak out just because you get a bounce. If you're watching a smaller time frame there on that test, that might have freaked out some individuals. All right, so let's come over here to the 3-minute. And there's some more clarity there. Oh, you know what I forgot to do? Let's go back here, load this up so we can see this on the other time frames. Let me sync this trend line over. There we go. So now we can see it on, there it is on the other charts, the 3-minute. So we had, look at the waterfall we had here in price off this 3-minute chart. Look at the flip in momentum. I had some, my indicator alerted me, well, had we been doing this a little bit earlier this morning, we had divergence here. The market turned on that. Both places, look at that. So that was a big move to the downside, right up here against this resistance. That was about 10 handles higher here. All right, so now we're seeing the momentum indicator kind of turn a lighter red. So momentum is waning just a little bit here. This is possibly putting in a low. So again, we are just barely, about a third of the way into that ellipse here at this point. Maybe a little bit farther than that. It's kind of hard to judge that, but down to the 1 minute, we'll see a little bit more noise here, but you can clearly see the waterfall here. We had the test, the bounce, and now perhaps another retest of that level. Going back this way, I can see here to here. So we could see a bounce here sooner than later. All right, so that said here, let's just kind of keep our eye on this at the time being, for the time being, excuse me, and we'll come back to this. Got a couple other markets I want to take a peek at, and you can see now we're getting a further push here. Maybe we do stay with this for just a moment. All right, so the bottom of that ellipse, like I said earlier, comes in around 29.11, right in that ballpark. It's another, well, you can see where it is. That's another six points lower or so. All right, so we can sit here and watch this all day, which is fine to do, but I think I want to look at the gold because that's always a popular market. So we're going to move over to December gold, and we'll come back and check the S&P in a little bit here. Again, I have similar levels marked off here on this chart as well. Let's start at the 729 and kind of take a peek here. And you can see the market has bounced here. The gold, of course, gold is up, the gray is down on my charts. Just coming off the support level here, heading back to resistance here at the moment. But the difference is price hasn't really gone anywhere, but momentum is really kind of fallen off the table here at an area of a possible cycle low here as this starts to hook back up. And so one thing that I like to do here, let's do this. So we really kind of have a triangle pattern that's right through here. Momentum is waning a bit to the downside on this time frame, coming off support, a little triangle pattern in place at a possible cycle low, which could be, you know, somewhere in this area. If the market wants to clear that, perhaps that would be a buying area. We'll have to see. We have to look at context. So I look at the market through the content of different time frames, and I try to take that into context. If that makes sense. So let's go down here to the 243. All right, so there's also a head and shoulder pattern on here. And we have kind of an asymmetrical head and shoulder pattern. Now that shoulder right here, you see that's not perfect, and which is actually what I prefer with my methodology. But what I really want to show you based on my indicator here is look at this. So if I draw a trend line here from the shoulder to the shoulder, notice how that is inclined. But then I come over here to my momentum indicator. Look at the loss of momentum during that same point in time. Tremendous loss in momentum. So had this, had I been up and paying attention to this back here, that would have been a shorting opportunity here. Of course, in context with the rest of the time frames. So it's, again, just to kind of reiterate here, it's support and resistance. Then I also throw in chart patterns, and I'm reading momentum and cycles in the market. So you can see this was actually last night, about 8:14, the 8:15 candle, 8:15 central candle that formed up, shaped up. And that's a good little decline there, isn't it? 1527 down to 1504-ish. All right, so you can see the market is kind of pinned here up against this little resistance level here at the moment as the market has bounced off of that mid-level support area. Let's come down to the 81 minute. Now, if you're using the Nadex charts, that's great. You just have to kind of round off these time frames. You can't load an 81-minute chart there. You can look at an hour chart, excuse me. You can look at a 4-hour chart. You can look at a 30-minute chart. You can get close. All right, so here we are again, looking at now the 81-minute chart, and you can see how it's kind of, price is kind of wedged here between these moving averages. The cycle study is veering back to the downside, but we still have pretty good momentum, still bullish momentum here in the market. So kind of have almost a small, you see that? Kind of a small flag pattern on this time frame. So came off the lows, bounced off the lows, cycled back up, and now kind of vacillating between those moving averages. And as I do this, what I tend to see is clarity or lack of clarity in the markets. I'm looking for, primarily looking for reasons to stay out of a market as I do this. I think most of us tend to look at reasons to stay in the market or to get into a market rather than staying out of it. So I'm all about risk management. All right, so here again, we have, let's see here, we can kind of draw this from here to here. And I think I just blew that. Let me redraw that. There we go. So there's your flag on this time frame. So positive or bullish momentum, even though it's pulled back some, it's still bullish at a cycle low. See that? Within the chart pattern. So right now, looking for a potential breakout there. Now, that is just that pattern. Let's also come through here and mark off a couple other areas here, because I can see we do have a lot of wicks in here. See all these wicks that attack this level? There are some real bodies in here as well, but that comes in right at the top of the flag. So that's going to be a key resistance area. There's kind of a zone of wicks. In fact, I could probably outline that better here simply by drawing over the top of them here. Yeah. You can see on the downside here. So we have these big wicks here. So the reason I'm looking at these and focusing on these at the moment is because wicks tend to get filled. You can see here as the market moved down, it was filled over here. Then we had these wicks up to the upside here. Eventually were filled over here. So I tend to look back at those just to see where the market is in relation to where those wicks occurred. All right, so I'm going to actually delete that. Just wanted to point that level out. So let's go down to the 9-minute chart here. Loss of momentum equals a loss in volume. You know, I don't pay much attention to volume other than the specific contract months I'm reviewing. I generally, it's not even, I don't even relate them to that because this indicator set up totally different from something like volume. It just means that there's a lot more buying pressures coming in as the momentum to the downside starts to flip, or vice versa. All right, so this is the pattern here on the 9-minute. You can see a little more clarity again. I do have a horizontal line right here, right there. So you can see where that comes in relation to that wick. So we can fine tune that a little bit there. And then looking at the 3-minute, so you can see how momentum is still bearish here on this upper right corner chart, but it is heading towards the zero line is about right here. So that's a crossover. We do have bullish momentum on the 3 and the 1-minute charts. So any type of breakout here, we'll flip that definitely here on the 9-minute. And then we will have at that point, if you look at this, if the market breaks out up here, this should flip over the zero line. This would be positive, or still is positive, as is this. And we have, back-to-back markets they're showing some energy to the upside, and we come out of a cycle low on this 27-minute chart. So we have energy in the market through the patterns, pattern recognition is to the upside here at the moment. And that would just be more of a confirmation here if the market breaks out of this bull flag pattern that I've found. All right, so one more market. Before we do that, let's go back and take a look here at the S&P, see what happened with that. And then we'll take a quick look here at the US dollar Swiss franc. All right, so not a lot has happened since we just reviewed that market, but you can see here came down again a couple of other times on this 3-minute chart and tested that trend line that I drew there inside that ellipse, right? Bouncing around here. So we're getting a little bit of a pop here off of those lows. Those lows again occurred right here around 29.16 and some change here. So slowly grinding higher here. So you watched me walk through this. I identified key levels, right, where we could see some action in the market. The market move into those areas, and then we look for a reaction off of those areas. All right, so let's look at the dollar Swiss franc. All right, so again, I'm going to start here today because we're running out of time, but we'll start here at the 243-minute chart. So notice how the market has moved higher, currently sitting almost in the middle here between my two zones, my support zone, which is green, and the resistance zone, which is the light red. There's also a horizontal trend line right here marking off a key level as well, just kind of highlighting that once again. Energy is fading a little bit. And big believer in looking at the market energy. Look at this. See, so the market pulled back and it has reacted off of that support area right there. I talked about reactions of support and resistance. We still have some positive or I should say bullish momentum, but it has, as you can see here, has pulled back a bit. The market is starting to move slowly back up. I want to see my cycle study here hook back to the upside for a possible entry here. All right, so you can see the cycle here in this time frame. We go down divisible by 3, and you can see we're definitely moving higher here at the moment. But the market the market hasn't really gone anywhere at this point in time, sitting right on top of that moving average. As you can see, momentum though is you can see the difference in color here. The darker red to the lighter red, and now almost back to zero after it broke down and went bearish through this whole move through here. Perhaps a head and shoulder pattern is trying to develop in here. We have this area here. Here's a shoulder, again, asymmetrical patterns, my preference. And we have that, and actually that whole thing there could be called the shoulder. This could be called the shoulder here as well. We could call that the head. All right, so here we have pretty equal. Not here though. We have quite a difference. So quite a loss of momentum here at the moment. A lot of sideways type of action though as well. So we need to keep looking at this. All right, so we're coming down to the 27-minute. All right, so a little bit more clarity here. Before I do that though, got to go back here and let's sync these areas that I just drew out here. Hold on just a sec here. All right, so there you go. So now we can see these in a little more context. There's the right shoulder shaping up there. As momentum continues to increase, if it takes out the prior high, which was established right here, looks like the 712 candle. By the way, these charts are in Central Time. So if it takes out that high, then we're very likely we'll see an increase in momentum here. And then I would even go out here and let me show you this real fast because this is something that I do day in and day out. So look at this swing high right here in my momentum indicator. And then let's compare that swing high right here, swing high in price right there. Look at where momentum is here at the moment. Just about to take that out, isn't it? If this momentum indicator breaks that blue dashed line I just drew on there, then I would project out that price is very likely to come into this region right in here. Now, it may not look like a big move, but that is about to the low of that, only about 4 pips. We get up to the top edge of that, then we're talking about a, well, actually it's further than that. You see we're 98.01. And let's see, the bottom of this is 98.09. So it's about 8 or 9 pips there. And then up to this one is about, what is that? 10 pips or so, 10, 11 pips. My math's off a little bit, but you get the idea, I think. But that's how I use my tools to help project out price. I talked earlier this morning about projecting. Now, obviously things have to happen here for that to take place. We do have a potential reversal pattern in place as well. We see this cycle high that's trying to, that has materialized here, which coincides right with that shoulder. So what happens if momentum turns over to the downside here? We could very easily have a short entry. So see, you have to just let the market tell you his story. So one last thing we'll do on this chart, or excuse me, in this market, is just a quick look here at momentum. So momentum is bullish here, but it's losing strength, excuse me, to the upside. Here it's bearish, but going higher. This is bullish, kind of flattening out. Bullish, but losing strength, right? And this is bearish. So we kind of have, you know, a mix of things here, right? Not a lot of clarity. So I really want to see the market break out. And this is so when I don't have that clarity, that's where I want to just stand aside. So I want to see the market do something, and I'll react to that. All right, one more thing here before we get out of here this morning. Let's come back to the S&P, take a look at that, and then we will call it a day. And some days my charts don't like the GoToMeeting. I think they just froze up. Well, that's a bummer. All right, well, the market's at 29.11-ish, 29.11 on the S&P, and my chart's just locked up. Well, that's unfortunate. So 29.11. So in other words, the market's falling. I believe the bottom of that ellipse, if memory serves me correct, was right around the 29.09-ish, right in that ballpark. So the market's very close to that. Sorry, I can't load that up for you at the moment, but it's like my data freezed. Everything froze here. So we'll go ahead and wrap it up on that. Keep an eye on that area for the S&P, see if it holds, and perhaps you'll be provided with some sort of opportunity later on. All right, that's going to do it for today. Thanks a lot for being here. We'll do this again next week, and we'll see you then, hopefully. Have a great day, everyone. I'm Jim Prince. God bless. See you then.